Welcome to Short-View Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short-View Trading. It's early morning London time, around 9 a.m. on Monday, 3rd of June, and this is your morning market hit. In this video, we're going to dig into what should you be looking at if you want to trade equity index futures. If you want to move long or short S&P 500 futures or NASDAQ 100 futures or FTSE futures, what factors should you be thinking about? What should you take into consideration as you go about making your decision as to how to trade the market on that 1 to 2 week time frame? And the context of that price action is, if you look at the S&P 500 on a sort of multi-week, multi-day basis, the question you've got to ask yourself last week was, is the market rolling over? Did the market start to roll over after the strength we saw in the first half of May? Because you'll remember on CPI day on the 15th of May, the S&P popped nicely higher as CPI came in lower than expected, and therefore some rate cuts could be priced back into the interest rate curve and equity markets could rally as a result. But that rally on the 15th of May took the S&P 500 just above its highs from the 1st of April. So pushing out just to a new high, testing that key resistance level put in place in the 1st of April. But after that, the market then tracked sideways. It stalled. It stalled for the next few trading sessions and traded in a very narrow trading range, really from about 5,300 to 5,350 for the next 3 or 4 trading sessions. And then, of course, what happened was one wondered whether the market's consolidating its gains or is it about to start rolling over? On Thursday, the 23rd of May, we started to answer that question, as you can see on that GIP chart that's been up in front of you. On Thursday, 23rd of May, you started to break that level, that 5,300 level, an initial break that questioned the upside momentum. And then, of course, you get into last week and bond yields backing up at the start of the week, pressurizing the equity market and pushing it even lower, such that it's breaking below the lows of the 23rd of May. So it looked very much over the course of most of last week that the market was rolling over, the S&P was starting to move significantly to the downside. And then, of course, finally we get into Friday's trading session. And what a dramatic session it was. It started with some very poor macro data when the Chicago PMI index was released, came in much worse than expected, came in with a 35 handle, much below normal levels, much below what was expected as per the consensus. And actually, as you can see from the chart we've been putting up in front of you, 35 generally means recession from the Chicago PMI. So that was very dramatic data point. The market sold off initially on Friday, but it couldn't follow through. And that was the interesting point. Because on Friday, despite the weak momentum to the downside in the earlier part of the week, the S&P 500 couldn't follow through, even on the back of a very weak Chicago PMI data point. And indeed, as you see on the GIP chart that we're putting up again, the market rallied aggressively, reversed sharply on Friday, picking up from that weak level post-Chicago PMI, rallying around 2% over the course of the last hour or two of trading into the close, up 100 points on the day. And indeed, what happened was the index put in what's called a bullish key day reversal. And a key day reversal is when an equity market opens below the prior day's lows and closes above the prior day's highs. In other words, it tries to sell off and then just doesn't work and rallies aggressively. You get a short covering rally, as we saw on Friday, and it closes above where it was on the prior trading session. Now, when it's from lows to highs, that's bullish. When it's the other way around, it's a bearish key day reversal. As I mentioned, of course, Friday's was a bullish key day reversal. So the price action changed dramatically on Friday. The momentum changed dramatically in the last couple of hours of trading. And so this week's going to be really quite interesting. And indeed, particularly interesting because it's a big data week from the US. It's the first week of the month. Of course, you've got ISM manufacturing today. What will that be like post-Chicago PMI? Roll through all the way through to Friday's non-farm payrolls. A lot going on and a lot that might move bond yields and might move equity markets as well. But really, to see how we're playing this, please see today's daily rag. If you want to take a trial, simply click on the link below. In our daily risk appetite gauge product, we look at the context of the market's price action. We think about all our short-term 1 to 2 week market timing models, update the key ones, show you the interesting ones, and then we give you an explicit recommendation on how to trade equity index futures on that 1 to 2 week time frame. And as I say, typically S&P 500 index futures, but sometimes NASDAQ, FTSE, DAX, and other equity index futures. So to take a trial, please click on the link below, or if you're a subscriber, it will have been in your inbox and gets into your inbox 8:30 a.m., 9 a.m. London time, each and every business day. So what are we watching this week in terms of key events? Well, as mentioned, there's a lot of data out of the States. It's the first week of the month, so it's the big macro data for the US with the ISM services and the non-farm payrolls. Also JOLTS and one or two other bits and pieces. That's the first key theme. Second key theme is the ECB's got a policy meeting. Announcement on Thursday, the central bank's announcing its monetary policy decision. It's widely expected to cut, starting its rate cutting cycle. And the press conference in that context will also be watched closely. So that's key. And there's some other interesting bits and pieces of data out over the course of this week as well. In the UK, we have the BRC retail sales, which normally isn't a big feature, but it was very weak last month. So that needs to be watched closely. And also German factory orders in the middle of the week. So that's it from us. That's your morning market hit for Monday, 3rd of June. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, or like and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe. Trade well.